All right, we in that thing like a chicken wing. Okay, cool. So let's see if the harmonic scanner got anything. Excuse me. Oh, one thing I'm also start promoting. I want you guys to be able to take advantage of this. You can also share with your teams. Obviously, assuming whoever's on the call is actually within IM, because I know my Telegram is open to the public. So I've actually created a YouTube playlist for some of the products, and I intend on creating a full-blown YouTube playlist for every product within IM. So you know, you guys can reach out if you want to, and I can, it's all on my YouTube channel, but I know not everybody is going to maneuver through the channel, so I can just hand pick it and send it to you. So I'm actually going to also drop in the chat 2 different playlists, okay? So y'all can go ahead and look in the chat shortly, and you can copy this, you can look through it, and you can share it with your team. So the first playlist I'm about to drop is the harmonic scanner playlist, right? It's going to look like this right here, okay? So I have 4 videos, how to use a harmonic scanner, the 4 new strategies, who should I watch, which is basically telling you what educators to watch and what videos to start with, and the Pro Pack, since it is now a part of the Pro Pack, right? The next one I'm going to do is going to be the DeLorean. So why am I doing that? Because we use a harmonic scanner and DeLorean on this call. So I'm also going to drop the playlist for the DeLorean. Let me go ahead and drop that in the chat. So you guys will now have both playlists, okay? And the DeLorean one is going to look like this. So it's actually going to be 5 videos, how to use the DeLorean, how to use the DeLorean app, how to use Hyperdrive, who should I watch? Once again, going over specifically the educators and what videos to start off with, and then the Pro Pack, all right? So like I said, I ain't playing with y'all, man. You know, I'm putting in a lot of work. So hopefully you guys are taking advantage of it, because I already know all this information. I'm really putting this out there so people have the ability to watch it. And you know, I'm putting all my experience in those videos. Very, very detailed. So definitely look in the chat and take advantage of those playlists, copy it, save it, send it to your team, share it with your team, share it to your newest members. And I guarantee that people are gonna, you know, be able to take advantage of those and have a nice kickstart versus you just telling them to go hop on a go live session. They'll actually know where to start, who to start with, what videos to start off with, so on and so forth. All right. So hopefully y'all appreciate that. And as usual, the harmonic scan doesn't necessarily have anything I'm interested in, which is okay. For how I trade, I don't necessarily find a lot of setups on here, but whenever I do, they're usually bangers. But yeah, we don't have anything on here as of right now, which, like I said, is not really an issue. So don't need that anymore. The DeLorean has not called out anything for about 30 minutes or so. In about 4 minutes, we'll see if there's another potential opportunity. And as of right now, first thing I want to be able to do is I want to start off with the trade I did that we took an L on, which is NZD CAD. All right. So I'm not necessarily going to spend too much time going back. I'm really not going to break this down at all, just because we broke this down yesterday. So, you know, obviously, if you guys want to be able to see me break this down, because one thing I don't care to do is break down a loss, that's for sure. But like I said, I'm not going to hide from it. So I want y'all to see the transparency. So if y'all want to be able to get the full breakdown of that setup, you can go watch this video that I dropped earlier today titled 4 Steps to Freedom Live Trading from yesterday. But ultimately, one thing I will tell you guys is I'm pretty much at the point to where any trade that I take, I'm going to be honest, I know that there's nothing I would have done differently. So that's another reason why I don't necessarily care to break down a loss, just because normally, and it's not to sound too cocky, like I said, I've just back tested a lot. So I'm at the point to where the more, basically all my setups are damn near, they look the same. And I give you guys so many confirmations that I use, and I use the same confirmations. And y'all have seen so many trades go in my favor from the same confirmations. Like last week was an amazing week. We had, I think, like 400 to 500 pips, and overall you could have maxed out, I think, like 15% account growth, right? So you know, even without anything else being said, like personally, like I said, where I'm at in my trading, any trade that I lose is just a part of the game. It's not like I can go back and be like, oh man, I could have did this different. Oh man, like I just truthfully, I just can't. So that's what I'm repeating to people. That's where you ultimately want to be. So if you're taking losses, which, like I said, don't be ashamed of the losses. I think in trading, we get too caught up in seeing people only send screenshots of their wins and they never show you that they lost. Everybody loses, bro. So just because old dude only posts on his Instagram all his wins doesn't mean he's going undefeated. He's losing, okay? He's just not talking about it. So I talk about my losses, but the thing that I learned is I'm at the point, once again, to where when I lose, there's nothing that I could have done differently, literally. And that's not to sound cocky. That's not to feel like nothing. It's just, if you know that you're guaranteed to always lose at a certain extent, you can't necessarily feel like there's always something you could have done differently. Sometimes there ain't shit you could have did differently. It's just that you weren't supposed to win that trade. So don't beat yourself up and feel like, oh, you don't need to do anything, right? If you're at a point to where you're losing a lot consistently, and you can go back and be like, oh, I could have did that different. That's different, right? Yeah, I went through the whole, damn, I lost. Okay, I could have did this. Damn, I lost. Oh, okay, I could have did this. Damn, I lost. Oh, okay, I could have did this. Now I'm at the point to where it's like, okay, I lost. There's nothing else I could have did differently because all of my trades are basically the same. So I guarantee if you guys start thinking about it in retrospect, if you're losing a lot, I guarantee a lot of your setups look completely different. So whenever I was losing a lot, setup to setup used to look completely different. Like if I were to take screenshots of both setups, they would look completely different. And that's why I used to have a lack of success. So with this, kind of like I said, there's nothing I could have honestly did differently. So I'll save this to upload on my YouTube channel. Cause look, literally, I'm showing you guys transparency. So these are 3 videos I still need to upload on my YouTube channel for successful trades. This blue folder are the trades that I lost that I still need to upload. So like I said, I'm uploading wins and losses. I'm just, as you can see, I'm procrastinating, but because it's so many videos and I'm only dropping 2 a day. So it's like, that's a good problem to have. Like I have more content than what I can actually drop, which is what you want. You want to have a lot of content. So I have a dumb amount of content, because think about it, right? I'm literally dropping YouTube videos for every single trade idea I send out, and every single time we do one of these calls. So it's like I'm guaranteed to have, like, with these calls alone, I'm guaranteed to have 5 YouTube videos every single week just from these calls. Then I'm going to send out multiple setups. So it's like, it'll get backed up. But like I said, it's a good problem to have. So I definitely always recommend that people please think about starting a YouTube channel. Like, I'm one of the people to where whenever I really found out about YouTube, damn, gold is probably not going to activate. Damn, that bitch dropped again. I'll keep this here, but at this point, gold is probably not going to pull back and give us that entry. Just being honest. That's fine. That's fine. That was a nice looking setup. I'm gonna still go over this setup. I'm gonna just leave it here just in case if it does pull back. It did break that low though. Actually, I'm not gonna worry about that. Let's just focus on the trade at hand. All right, so we're gonna focus on Euro JPY. Okay, so Euro JPY is actually gonna be the setup that we're currently in. So as usual, as I said, every trade that I personally take, I'm gonna send out to my Telegram chat. So like I said, we already went over the NZD CAD. It was an L. Don't really care to go over it. If you guys want to revisit it, like I said, go watch the session from last night that I threw up on my YouTube channel. All right, Euro JPY. So Euro JPY, I'm not gonna take so much time and go over this one either, just because honestly, we actually went over this last night in very extensive detail. So I'm not just going to skip past it. I'm going to kind of rough draft it, but we did actually go over this setup as well last night too. So Euro JPY, as you guys can see, it's a 15 pip stop, sell limit. You got 4 different take profits, a swing target, and risk to reward is amazing. So this is what the picture looks like. I like to be able to send a picture with every setup. This one is not like my normal setups because you can't really see what's going on, because I call this off the 30-minute time frame. So you can't really see what's going on up in here, right? Can't really see what's going on up in here. So that's why I want to, be able to make sure I break it down. Shout out to my boy Kevin. Shout out to my boy Kevin on the call, one of our top traders. So shout out to you, my brother. Appreciate you for hopping on the call. Definitely one of our snipers. All right, cool. So let's go ahead and break down EJ. So like I said, we already, discussed NZD CAD, it's a part of the game. One thing I want y'all to be aware of too is the reason why I don't get emotionally attached to losses anymore. I used to, because like everybody else, I used to over leverage. Okay. So whenever you over leverage, every individual loss makes you anxious as hell, right? So if you're not over leveraging, each loss is like okay, it's whatever. It's like if you play basketball, you miss a jump shot. It's like, all right, you know what I'm saying? But the other thing too is I know literally every single trade that I win, I'm going to make back at least 2 to 3 losses. Guaranteed 1 loss, but usually 2 to 3 losses. So every individual win is going to pick up 2 to 3 losses. So I can literally go lose 2 to 3 trades in a row. Not saying that I do that, not saying that I want to do that, but if I do that, I'm not really tripping because all I know is I need one win and I'm gonna make back those 2 to 3 losses. So that's one thing you guys want to focus on as well too. Risk to reward. Risk to reward is gonna make it to where you're not anxious, right? If you lose 2 trades in a row, it's like, all right, I just need to go win the 3rd trade and I made my money back. Even if you lose 3 trades in a row, you're like, all right, I just need to go win 1 trade and I made all my money back. So it's that's how you can become unemotional in the market. But anyway, so with all that, all that talking and whatnot. So let's go ahead and get into it. So once again, like I said, I'm not gonna break this all the way down because I spent a good amount of time on this yesterday, which is, like I said, why I record all these videos so y'all can go back and watch the video on my YouTube channel if y'all want to get like an extensive breakdown. But ultimately, I'm gonna kind of rough draft it, right? So if I remove the pictures, okay, the thing I want to be able to first talk about is I have 4 primary confirmations that I speak on, I implement, and that's what's helped me become effective in the market, right? So the first confirmation, actually, let me not do this. Let me do what I usually do. Let me pull up a different data feed, Euro, JPY. I said I'm not going to break this down all the way, but I probably am because we really don't have that many setups tonight. Because a few of the setups I was looking at from last night, like GBP USD, that just kept dropping. So that's nothing we can look at. These are really the only 2 things I have. Gold, I'm probably going to have to end up deleting it because it ended up breaking this low. I was looking for it to pull back, which it might still pull back, but it doesn't look as likely as of right now. It looks like it's probably just going to continue, but we'll still break this down. Anyway, I'll just leave this pending as of right now. Euro Chef is also something I'm interested in. From where it is now and how this pair moves, I strongly doubt this is going to activate today. But hopefully this might be one of those like midweek reversal type joints. So I'm probably not going to break this down either because, as I say, I don't like putting in effort to break down a setup that I don't feel like it's going to activate the same day because I can save that for like the following day. I want to always be able to have constant material to talk about on these calls. So kind of with that being said, really the only thing we have to talk about is gold, which, like I said, to be honest with you, it might already be invalidated. It might, because to be real, if anything, it's probably just going to react off of something like this and just keep dropping. So we might not get this pulled back. We might though. We'll see. I'm gonna still break that down. Yeah, that's pretty much it. So we'll just talk about Euro JPY. Wait. Oh, I know what happened. I'm like, what happened? All right, but put that back on the green folder. Okay. I need to pull up the O1. There we go. All right, but cool. So Euro JPY. So I'm looking at this. As you can see, I still have this marked up on the other data feed. All right, cool. So as I said time and time again, but I want you guys to be able to look for it. Start figuring out what time frame works best for you. So some people, I ain't gonna say some people, the majority of people like using higher time frames because that's what helps you identify the strongest structure level. So daily, 4-hour, things like that. I do that as well too, but I focus on the 1 hour to be able to build an initial bias, and then I can work my way up through different time frames once I've discovered that. So for me, I like to be able to focus on the 1 hour. So from the 1 hour, first thing I want to be able to do is identify the overall trend of the market. Okay. So one thing I notice is this structure level right here. This would be considered a break of structure, right? So break of structure is basically a previous high or previous low, previous support or previous resistance area that gets broken. And that's a lot of times how the market is indicating, okay, this is the direction I might want to start moving in. So notice how the market set this high up here, right? It gave a very strong move to the downside that came at about 610 pips that you see right here. Okay. So ultimately, the market created this high. This high did not get broken, but it broke a low to the downside. So this, as far as I'm concerned, is going to validate that this is a downtrend as far as on the 1 hour perspective. Okay. Now, if this is perceived to be a downtrend, that doesn't mean that this current move up is an uptrend. It just means that this technically would be a retracement within the overall downtrend to possibly give you a continuation to keep dropping. So one way I can figure out how deep of a retracement that we have is by pulling out the Fibonacci tool. Okay. So I'm simply going to take it from the high to the low. And I want to be able to see a retracement somewhere within the 61.8 to the 88.6. Why? This is going to be, where it's cheapest to be able to get into the market. Okay. You want to be able to get the market on discount. So say, for instance, you go to the store. I used to work at Walgreens, so I love using this example. I used to work at Walgreens, right? You got two kind of people. You got the people that buy the stuff before the holiday. You got the people that buy the stuff after the holiday. Now, if y'all know anything about the holidays, once Christmas is over, once Valentine's Day is over, once St. Patrick's Day is over, they just trying to get that shit up out of there because nobody's trying to buy it anymore because it's already over. Like nobody's still trying to buy Valentine's Day stuff at full price once Valentine's Day is over. So they're going to mark everything down 50% off, 75% off, 80% off. This is the same concept. So the way that you're looking at this is this would be 61% off, 71% off, 78% off, 88% off. Okay. Give me 1 second to see if the DeLorean called out any bangers. I am late. Why did I just not get this alert? Oh, I'm not just not getting this alert. I'm just not seeing it. Yeah, my bad. I didn't even see if they called these out. It might be a little late, but let's see. Hold up. Wait a minute. Let me see if we got anything in it. Nope. NZD Chef. Nope. USC Chef. That's pretty ugly. I don't like that. I'll pull that up though. USC Chef 15-minute GBP NZD. Damn, they called out a lot of stuff gold. So they did call out a bearish DeLorean for gold. Yeah, I don't think gold is gonna come back for us. But like I said, I'm gonna just leave it. If anything, I'll tell you I'll delete it later. Let me go look at USC Chef real quick because sometimes it looks a little different on the actual chart than it does on the scanner. What time frame is that? 15-minute. Nah, I don't like that. All right, cool. Back to the previously scheduled program. All right. I bet. So now that y'all understand the concept of the fib, we want to be able to get it when it's on a discount. So if it's not on discount, we don't want to do it. So all I simply need is I just wanted to get in discount area. Obviously, we would prefer for it to be the cheapest, which would be the 88.6, but you're not always going to get that. But it's valid just being within the zone in general. Okay. So we got this reaction off the 66 after 61.8. This is going to give me the confidence to be like, okay, so I know that this is a downtrend, right? I know that this is a retracement. I know that we are now in a discount area, which makes sense to look for a continuation if that's my bias. So my second confirmation is, what is my bias? My bias means what direction am I looking to take the trade in? Okay, so it's a downtrend. It doesn't guarantee that I'm going to take a sell, but just for me breaking this down, it makes sense for this specific idea for me to go with the trend. Okay. Some instances I go against the trend. This instance, I'm going with the trend. So now that we've already broken that down, I know that this is a downtrend and I know that I want to take a sell. Now, what's the next thing I'm looking at, right? So if we focus on this area up in here, okay, if we focus on this area up in here, right, what I want to be able to look at is, once again, this is very similar. So notice how the market created a high, right? As of right now, this high did not come back up and get invalidated. But what did the market start doing? It started breaking structure. It broke this level, okay? It also broke this level, okay? I mean, shit, it also broke this level. So we got multiple structure areas to the downside being broken. So this is literally continuing to say, hey, Tyree, we want to keep selling off, okay? That's basically what I'm saying. That's what I'm identifying, right? Now, think about this, right? So if we do the same concept, right? Think about this high that was set. Move this out the way. Think about this high that was set, okay? This structure level that was broken. The proper way to use the fib is you want to wait to get some type of structure or BOS, which is a break of structure, before you pull out the fib. So I can actually pull out the fib, right here. I can come down here, right? And then what you guys can see is, once again, the market gave us a retracement within this zone, right, before it continued, okay? Now, we did actually get the best discount area, which is the 88.6, which is preferred, but you do not always get that. So notice how aggressively the market fell off, right? It sold off, retraced one more time, sold off again. What did it do when it sold off again? Once again, it broke another level of structure, okay? So now what are we potentially looking at? We're looking at the same thing. So if we were to go, right, from the high, okay, to the low, Look at what we got again. So we got a level of retracement to the 78.6, which also actually lines up with this engulfing or institutional candle, depending on what you want to refer to it as, perfectly. Okay. So this all in all is like simple terms without me even getting like super advanced or anything like that. This is just simple break of structure, retracement, continuation, break of structure, retracement, continuation. So you want to know, we want to see the same thing we just saw in these previous examples. We want to be able to see the market reject, give us another drop, break this low, and then, essentially keep doing the same thing, right? Now, let's talk about entries, right? Let's talk about entries, okay? So I basically got to the point to where I originally was looking at this 6-hour candle right here, which, as you can see, the market has already reacted in, okay? Now, normally, you would like to be able to put your risk above that institutional or engulfing candle, but I actually saw that there's an opportunity to be able to reduce my risk and keep the same entry, which obviously is going to increase your risk to reward, is going to increase your pip count and reduce your stop loss in turn. So I was able to actually go lower on these time frames, okay? And I was able to focus on this area right here, right? So notice this 30-minute candle. This is similar to what you see on this 6-hour. It is just smaller, right? So within that 6-hour, I was able to actually find, a candle of interest to where I can reduce my risk. So I can actually put my risk right here, okay? Which, notice the market came close, but no cigar. This is another reason why I always tell people, make sure you add spread, okay? If I did not add spread, okay, the stop loss probably would have been hit from spread. I don't think it officially got hit just based off of the structure, but spread definitely would have taken us out. So this is a specific reason why I always add 2 pips of spread to all of my entries, okay? To be able to help you stay in the trade if the market gives you a deep retracement, which sometimes it does. Every entry is not going to be a sniper entry, but you can avoid getting stopped out from spread if you add spread to your initial stop loss. Now, let's actually talk about, hold on, they just called out some more. Don't like that. AUD chef, don't like that. Okay, cool. Back at it. So from this candle of interest, the thing that I want to be able to focus on is, once again, right? We can pull out the fib, okay, like so. And you guys can see where the market ended up reacting at, okay? Now, how did I find my exact entry? So whenever I'm looking at these candles right here, I initially like to be able to find the 50% of that candle, okay? So for those of you that don't know what that means or what that is, the 50% basically is going to represent, the equilibrium. Is going to represent, like the sensitive spot, things of that nature. So if I put right here, look at how perfectly the market reacted off of that. Now, that's not where we entered, okay? But look at how perfectly the market reacted off of that. So the reason why I speak on the 50% and why I don't always just enter off of there is because I've seen a lot of different scenarios to where the 50%, the 50% basically does not get hit in certain scenarios, okay? So what the market will do is the market will basically sometimes miss the 50% and go in your direction, and you're kind of just sitting there looking sad with the puppy dog eyes, right? So I started looking for opportunities to be able to take, a slightly more aggressive entry, but I don't feel like I'm just being overly aggressive, right? I'd rather be in a little bit of drawdown than miss the trade altogether, okay? So the thing that I wanted to be able to focus on for me is going to be pretty straightforward. And I'm going to break it down to you guys, okay? I'm debating on if I'm going to adjust my stop loss to break even. I really don't know yet. I'm kind of torn right now. We'll see. As of right now, I'm personally just leaving my entry open. But I'm thinking about it. We'll see. I usually like to wait for some type of structure break before I adjust my stop loss to break even, which we have not gotten yet. But last thing I want to do is adjust it to break even. It hits me out and then it just drops. Because what I'm actually going to show you guys is within this wick, I personally think it's going to pull back to this wick before it continues to drop, which is why I really don't want to adjust it to break even, because I would stop myself out for it ultimately to maybe react. And I'm going to dive into this wick so I can show y'all. But focusing on the entry of this candle, okay? Once I locate the 50%, I like to utilize the Fibonacci to be able to find the entry. Now, normally these fib levels are going to be somewhere within this candle. But on this specific scenario, the maximum fib is down here. Our candle is up here. So what I wanted to make sure is, like I said, that we got an entry. So yeah, the 50% in retrospect got activated, but I just want to be able to get into the trade. So for this example, I placed our entry at the opening of the setup. And if I go back, as you guys can see, this is basically how we got our entry. Now, the thing that I want to be able to speak on is, where do I think this market is ultimately retracing to? Which, like I said, I could be wrong. A stop loss could be hit. You know, if y'all want to just a stop loss to break even, you can. I'm just telling y'all what I'm doing. So what I think is going to happen is, if we look and dive in within this candle, which gave the deep retracement, I think the market is going to pull back to, I think it was a 4-minute right here, right? This is what I think, okay? I personally don't take, like, I only take one entry, so I'm not the kind of person that takes another entry. I don't like doing that because I don't want to start, you know, getting into a bad habit. I'm gonna let the one entry do what it's gonna do. But what I see is this right here. So once again, this is on a lower time frame, right? This is the initial reaction, okay? So what I would be looking at to see if this holds, which it couldn't, it might not, who knows, right? It's gonna be this right here. So, right, same thing that we've been doing, okay? The market, right, dropped. We possibly want to be able to see a retracement, possibly into this 4-minute engulfing / institutional candle. And we're going to look at the same thing that I was just explaining. So if we were to be looking to enter off of this, which once again, like I said, I'm not, because I'm already in the trade. So I'm not looking for another entry. I would initially mark up the 50%. So I can see, right, where the 50% is relative to, you know, the candle. It's right here. And what I like to do is, I like to be able to draw a zone. So I want to be able to draw a zone from the opening of the candle to the 50%. Now within this zone, I want to be able to look for one of the fib retracement areas. So in a nutshell, this is where I would possibly this is where I could potentially see the market retracing to before it. I'm just really anal with having like even numbers and stuff like that. But this is basically where I would like to see the market possibly retrace to before we get that continuation down. Now, like I said, I could be wrong, right? The market could blast up, hit the stop loss. I don't know. But as I told you, I'm okay with keeping my risk open. Now, it did give us, most people would have adjusted their stop loss to break even. I don't trade like that though. Like I said, I need some type of break of structure. So yeah, it did drop 25 pips. Yeah, it was only a 15 pip stop loss. So you did actually get like a 1.5 to 1, not too far from a 2 to 1. But like I said, this is personally me. All right, this is how I trade. Y'all don't have to imitate what I do. I'm just giving y'all updates on how I'm personally going to manage my trade. All right. And y'all basically, you know, do whatever you feel comfortable with doing. So this is what I'm going to do. I'm going to hold this trade. Okay. I have this area marked up, and I'm basically going to wait for the market to get to this candle and see how it starts reacting. Not that I'm actually going to do anything, but this is basically what I'm looking for. So in my eyes, I'm still looking for the market to drop. So what I would like to see is, I like to see the market, you know, possibly do something like this. Okay. And then give us that drop that we want to be able to see. That's what I personally want to see. Will we get it? Who knows, right? Do I think we will? Definitely, because this looks really good. But like I said, who knows? So I'm actually going to go ahead and put 4-minute on that one. And this is like what I'm going to be monitoring, more so after we get off the call, because I don't know if this is going to happen while we're on the call, because we only got about 20 minutes left. But yeah, so drop a 1 in the chat if this is making sense so far. Let's get a little bit of participation. Let me get y'all to drop a 1 in the chat if any of this is making sense so far. Let me see where y'all at with it. Let me see where y'all at with it. All right, bet. Okay, cool. All right. So that's basically what I'm looking for as of right now. Okay. So I'm still holding the trade. I haven't, like I said, I haven't personally adjusted stop loss to break even. Trust me. Whenever I do anything, I will always update you guys in my Telegram. So if you never see me update it, That means that I haven't done anything. I'm still holding it just like y'all. But like I said, it's your money. You can do whatever the hell you want to do. I'm just telling y'all what I'm doing. So that's Euro JPY. The next setup, man, I wish this would start going up. I don't know what that's gonna do. So maybe gold is gonna still activate. So we'll break down gold and see what gold does. Because like I said, I still think gold is actually a good setup, but I would actually need to adjust my entry at this point. But anyway, so let's look at gold. Gold doesn't. This is really the only data feed I use for gold, so I'm gonna just stick with this one. So same concept, right? If I start off on a 1 hour time frame, I want to be able to first off identify the trend. Then I want to identify my bias. Okay. So the trend for gold, as of right now, off of this 1 hour time frame, is bullish. Okay, it's bullish, right? You saw the market create this low point down here. Okay. Reason why I don't want. Oh, okay, now I can actually do it. So I can actually draw because all this up there. So the market created a low point right here. Okay. Ended up moving up very aggressively. I think that's like a 1,500 pips. It's definitely not 15,000. So it's like 1,500 pips, right? And then it ended up giving a retracement. So look, if I were to actually take my fib from the low to the high, like how I've been showing you guys, it's all going to be the same stuff over and over and over again. Smart chart. All right, fib. So peep this, right? What do we get? So the market ended up, as you can see right here, ended up retracing in our fib zone. The deepest retracement came down to the 78.6. Okay. So it came down to the 78.6, shot up again. Okay. So this is obviously a bullish trend. Now, what is my bias? Because remember, like I said, just because I can identify the trend doesn't necessarily guarantee I'm gonna trade with the trend. Okay. So if I actually come over here, I'm gonna show you guys what I started noticing, which is why I was why I'm still looking for a sell. Okay. So peep this, right? What I want you guys to notice is, once again, notice how the market created this high. We're gonna do the same thing I just did. Look, peep this, right? Created a high. Okay. It ended up dropping, retrace, dropped again. Okay. So what are we looking for? Peep this. If I were to pull out my fib, like I've been doing, find the low before it started pushing back up. Look at what the market did once again, right? It retraced back to our fib zone. Okay. More specifically, it gave us the deepest retracement to the 88.6, which is what we like. Dropped again. What did it do when it dropped? It broke structure. Peep this. Okay. All this is the same over and over, no matter what pair. So look, broke this structure. Okay. Retraced again. Once again, it did not break this high. The only way you know if it's valid is if it doesn't break that high for a sell. The high that initiated the impulsive move, if it doesn't break it, this is still valid. So if I were to take the fib from the high to the low again, okay. Peep that, right? What the market do? Again, pull back to our fib zone, right? More specifically, the 88.6. And then what the market do? It ended up dropping again. Now, we haven't gotten that aggressive drop like how we got in these two examples, but this is what I'm actually still looking for. So now that you guys are saying all that, that's why my bias is going to be for a sell, even though we confirmed the overall trend is an uptrend. Okay. So let's keep going. The next thing I like to be able to look for is, as you guys know, momentum weakness and divergence. So for any guys that have not been on my call, I personally love divergence. If you don't know what divergence is, I'm about to blow your mind today. So the thing I like to be able to do to identify divergence is I like to be able to put the candle chart to the line chart. Makes it easier for y'all to see. Okay. And what I'm going to show you guys is divergence. So what is divergence? It's whenever the indicator and the actual market are doing two completely different things. So notice how on the indicator, the market is trending down. And if I were to draw a vertical line, matching this up right here, this market, okay, is actually, well, this is kind of like evened out, but as you can see, more so like this area. So we can really focus, I guess, like on this, right? As this market is going down, in the same instance, this market is going up. So this is going up. As this is going down, that is going to be divergence, okay? So divergence is really good to be able to see when the momentum is shifting. So as you saw, the market was pushing up, you got divergence, then it shifted to the downside, okay? Now, I also brought up momentum weakening. What I mean by that is notice whenever this white line comes outside of the purple box, okay? Whenever you get this white line, I'm gonna just draw different examples. Anytime this white line comes outside of purple box, it means momentum in that direction is becoming weaker. Notice what happened when a white line came outside the purple box right here. It popped up, right here, popped up, right here, popped up. Now, every example is not gonna immediately react like that. Notice this, right? Came outside the purple box, it didn't really drop down that much. And if it would have came back up and you placed your stop loss up here, it would have been hit. So these examples, sometimes it'll pop down and immediately go in that favor. Don't always trade like that. So don't just see it go outside the purple box and just be like, oh, I'm gonna hop in for a sell. Don't do that. What the market is saying is, hey, I'm getting weaker to the upside, okay? I might start showing you signs and give you a reason to start looking for selling opportunities. And that's basically what it ended up doing for me. So now what we're about to dive into is we're about to start, honing in on where I was looking, why I got in, and all that good stuff. So go back to the candle chart, okay? Now we're focusing on this area right here, okay? So one thing I want you guys to start focusing on is notice a lot of times whenever you see the market peak above a previous high or peak below a previous low, and it immediately goes in a complete opposite direction, that is called a liquidity sweep, right? What does that mean? I want you to notice these two areas right here, how close they are. These represent people's stop losses, okay? So a lot of times the market is going to go in the direction of where people have a lot of stop losses built up. They're going to hit your stop loss, which essentially is taking money, putting money in their pocket, taking money out of your pocket. And a lot of times you can confirm that that's what they're doing, because notice how this one individual wick barely popped up, and then in the same candle, it aggressively dropped down in a complete opposite direction, okay? That's a lot of times how you can validate this, all right? Now, what I can continue to do is pull out my fib, take it from the high to the low. And as you can see, we barely got it, but sure enough, it did give us a retracement at minimum to the 61.8. So now what am I looking for? I'm looking for the continuation, right? To be able to have this market continue dropping. Now, excuse me, one thing that you guys can see is that once again, the market broke a structure level, okay? Notice that right there. Market broke that structure level. So what I'm actually about to do in front of you guys is I'm about to refine my entry, and I'm about to show you guys right now. So at first, as you can see, right, I ended up coming across this 2-hour candle. This 2-hour candle is what I ended up liking, right? So what I did originally, as you can see, I took the fib from the high of this candle to the low of the candle, which was the low at the previous moment. And I ended up getting the 61.8 as my entry. Now, since it created a new low, right? First off, I'm gonna put my stop, I'm gonna put the take profit down here now. Let's see. We got about 12 minutes left. So now what I'm gonna do, and this is how you guys utilize the fib, right? So if the fib breaks below or breaks above a previous area, but you did not get that retracement you were looking for yet, all you got to do is readjust it. So all I'm going to do is take it from this area, and now I'm going to move it to the new area right here. Simple. Okay. Very, very simple. So just like that right there. I can actually move this up a little bit, I think. Yep. Okay. I mean, my entry is basically the same. I'm not even gonna move it. I can slightly move it, but nah, I actually can move it because this is gold, so it'll actually be like a few pips difference. Let me make this as perfect as possible. Give me a second. Cause yeah, I'm probably gonna go ahead and update this entry. Even though it looks like it's basically the same, like I said, I'm just really specific with like all my stuff. So I just want everything to be perfect. But this honestly is not that big of a difference. It's like a 5 pip difference. But I'd rather still, you know. Yeah, that's honestly not even a difference. It's still basically the same stop loss. Let me see. So the pip count for the stop loss is the same, but the physical stop loss is going to be different. So yeah, let me update that real quick. Give me 1 second. I'm gonna update this in the chat. So for any of y'all that did put in the sell limit for gold, I'm about to update it. So give me a second. Edit. So the entry is now 900. Stop loss is still 31 pips, but the actual parameters of the stop loss are different. So it's just 823 even. TP1 is different now. Let's see what this looks like. Yeah. So TP1 is different now. But yeah, everything else will be the same. So the entry, the stop loss, and take profit 1 have changed. 8, 12, 820. All right, so TP1 is now a 2 to 1 versus a 1.5 to 1, which I ain't mad at. And instead of 46 pips for TP1, it is now 70. All right. And then the parameters is 1812 dot 820. Okay, so let me update that. So updated trade parameters. Entry is updated. SL is updated. TP1 is updated. Please check parameters and adjust accordingly. All right, guys. So I just sent that update. So definitely make sure y'all go over to the Telegram chat so y'all can see that information. Okay. And let me go drop it in the Discord. Give me 1 second. Copy. Let's see. Discord, trade ideas. All right, but oh man, I'm tripping. I need to actually hold on. I didn't actually update it. I don't know what you call it. My bad. There we go. And then on the Discord. All right. Updated. Cool. All right. And then almost done, y'all. Copy. Reply. All right, bet. So I just updated all that. So y'all definitely make sure y'all go tap into that. So y'all can take advantage of that if this trade does end up activating. But ultimately, I'm about to go ahead and finish it out because we only got about 5 more minutes left. So let's talk about where I put my entry, where I put it, and why I put it there. Okay. So basically, in the grand scheme of things, from this 2-hour candle, okay, same thing that I showed you guys on the other example. I like to be able to start off by looking for the 50% of the candle, which is right here. All right, next thing I want to do is I want to draw an entry zone from the 50% to the opening of the candle. The opening of the candle is here. The 50% is here. I then want to utilize one of my fib zones for my entry, but I specifically want my fib zone to be within my entry zone. So notice how there's technically only one fib zone in my entry zone by default. This is where I'm going to place my entry, right? And that's basically it, y'all. Like literally straightforward and through. And yeah, so at this point, like I said, gold is still valid up until the time that, maybe I come back later and say delete it. Hopefully it activates. And obviously, hopefully it goes in our direction, assuming that it activates. And like I said, I'm still holding Euro JPY. And I kind of told you guys what I'm thinking could happen. I'm thinking that it could possibly, it's looking like it might be getting ready to fall off now. I don't know. It might still ultimately pull back up here. So what I'm thinking could possibly happen is it can pull back a little bit more into this 4-minute candle before it gives us that drop. We'll see. But we are actively in the trade. So once again, following up with today, we took an L on NZD CAD, a part of the game. We're currently in profit on Euro JPY. I have not adjusted my stop loss to break even, so I'm still having my position open. And we also have another position for gold for a sell limit that I just sent the update for. So if you did not see the update, whenever you get off this call, definitely go do that. Now, before we get ready to hop off, let me go ahead and reference what I'm about to do because I'm always a student, okay? So what I'm about to do is I'm about to hop on John Dollery and Rock Kumar's session, okay? You do have to have the Pro Pack, okay? So if you're an IM and you have the Pro Pack, I recommend you hop on this call. This is what I do 3 nights out the week. As soon as my call is over, I immediately hop on their call. Why? Because I am still a student. These guys are 7-figure traders. I am not. So I'm not going to convince myself that I'm already where I need to be. That makes no sense, okay? I'm still learning. I'm still evolving. And yeah, so this is basically what I'm going to do, right? So I'm going to get on this session. And then the dope thing about this session is you guys can actually drop your setups or your markups in the chat. So if you guys are learning smart money concepts, right, you can actually drop your screenshots of your setups in the chat. And they'll give you what's the word I'm looking for? Constructive criticism. Okay. So this is what I'm about to hop on. I recommend that you guys do the same because I think it'll benefit you. So I'm just telling y'all exactly what I do, right? As soon as I hop off this call in 3 minutes, I'm about to hop on this one. And yeah, that's pretty much it. So as usual, guys, I appreciate everybody for being on the call. Love you guys. Appreciate you guys. Guess what? Tomorrow we're going to be back at the same exact time, right? 1 a.m. Central, 2 a.m. Eastern. Okay. 1 a.m. Central, 2 a.m. Eastern, same time tomorrow. And like I said, NZD CAD, we took an L. Euro JPY, we're currently in profit, still holding it. And then, potentially gold activates and we'll kind of see how that rocks out. So with that being said, guys, maybe I'll see some of y'all, not technically, but maybe I'll see some of y'all on this call that I'm about to hop on or go live. If not, make sure y'all have a great night. Trade safely tonight. And then don't do anything I wouldn't do. As usual, this recording is going to be uploaded on my YouTube channel later today. So if there's anything you want to revisit, maybe want to go back and take notes, maybe want to pause something, or maybe you hopped on late, it'll be on my YouTube channel, which is Tyree Samuels. One more time, I'll go ahead and plug it in. YouTube channel is Tyree Samuels, right? Tyree Samuels. And then I'm also going to drop the link for my Telegram chat one more time. All right, copy link, chat. All right, so I'll leave that up there for about 10 seconds. I'm gonna count down 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, so With that being said, guys, I'll see you guys tomorrow. Oh, my IG is @official Tyree Samuels. So I'll drop that in the chat real quick. @official. There you go. So I'll leave that up there for another 10 seconds. So in the chat, you'll see my Telegram chat. You'll see my Instagram, and my YouTube is my name, right? So my Instagram has my name in it, Tyree Samuels. That's my YouTube channel. So 10 seconds. 9, 8, 7, 6, 5, 4, 3, 2, 1. All right, guys. I'll see y'all tomorrow at the same time. Trade safely and have some peace.